Welcome to Trading Lounge and the Bitcoin report for Monday, September the 27th. We're going to be looking at Bitcoin and we'll have a quick look at Ethereum as well. They're both pretty much on the same wavelength. So our count on the bullish side of things has been wave 1 up here on the crypto index, wave 1 here, an A and a B and a C for wave 2 here, then up for 1 and back for 2, up for 1 and back for 2, and up for 1 and back for 2, and then pushing up. So it's bit of a thriller, bit of a knife cutting, edgy kind of event that's occurring here, because obviously all the moves down here have been pretty, sharp drops. So there's a good case for the bearish thing. As I mentioned last time we spoke, that taking the low out of this wave 2 here would be the way to go. So with Bitcoin, we look at the bearish side and the bullish side, because there's a case for both of them. We need to know at exactly what point we can go short or we should be long. So with the bearish side here, as you know, probably boring you to death over this, 1 and 2 and 3 and 4 and 5 for the A wave, the A, B, C for the B wave, and then down for 1 and back for 2, and then down for 1 and back for 2, and we need to take that low out. So I'm just going to go into a intraday just to pick up this here. We haven't really looked at it on the intraday. So with the B wave up here, wave 1, A, B, C for wave 2, down for wave 1, back for wave 2, down for wave 1, an A and a B and a C to that top there as wave 2, and then we would come down here as wave 1 again to these lows, have a bit of a rally for wave 2, and then we would come through this again. So that's the bearish side. We can take a closer look at this in a moment, but technically now could go long below here, then this one, and then now we can go low below this one, because if that's breached, then it confirms the bearish side. It's that simple. Of course, we're going to go in and have a closer look, and we're going to have a look at the bullish side and so on and so on. But if you are going to short, just remember that the move down through here as wave 1 will have a 60% retracement level as well. There's going to be a bounce off the 40,000, so you'll need to accommodate that. So I'm thinking that if you were going to short it, why not just take a smaller position there, and then we can look to build in underneath of the 40 as a retested resistance, and that would be looking for a classic trading levels pattern. Well, that's the variation of one. That's classic trading levels pattern 2, where it doesn't come back above the level, and the other one is where it comes down, bounces off, say the 40,000 in this case. The reaction, the first low below the level, that becomes our reference point. We can short that. And then, we may come back up above the level, and then, from that apex side here, that's that side, and that is the new side. So it's better to work on the new side. So basically the first level under here again, remembering that this little pattern in here will be the same as a fractal of this bigger pattern here. So come down or bounce off that, come through, go back up, blah, 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 and, go from that point. So that's the bearish side. And there's a good case for it, as I mentioned. It's like sharp knives dropping within all of this. But there is a case for the bullish side as well with this. So coming back to our daily chart, looking at wave 4 down here, looking at this as wave 1, an A and a B and a C for wave 2, and then heading higher at this point. So yeah, look, there's a good case for both of them. Obviously, emotionally, most people will be on the short side of things, but until you've got evidence, then you can't move, really. Well, you can, and we all do. So in this case, we're looking for, well, wave 1 up here, an A and a B and a C for wave 2, up for wave 1, back for wave 2. This will be 1 and 2 on 1 and 2. We need to go in and have a look at this further. So in this, it's not the right labeling. I mean, not the right colors in labeling, but anyway, it helps. So Wave 1 here, wave 2 here, wave 1 here, an A and a B and a C for wave 2 here. On this chart it's come down a fair bit, but on the other crypto charts it's quite a bit higher. And then wave 1 here, and looking for an ABC for wave 2. So we need to go in and understand this. So just as you know, I mean, look, there could be a very sharp bearish move coming, or there's going to be a really strong bullish move coming. It's going to be one or the other. So first of all, just before we leave here, let's just get this on track. So that's all of wave 1 to the upside, or wave C, because we could look at this as an A and a B and a C wave for the bearish side, then we'll be going down for one. So in both cases, it would be important to understand that the 42,000 is the 61.8% retracement level. So on the bearish side, even though we talked about going short down here, you really wouldn't want to see the 61.8% become the retested resistance here. You could probably get away with a very small position in here, but be careful about that, and then also add one to here as well, and then we'll be looking to add a full position over here for that. Otherwise, this 1 and 2 and 1 and 2 and 1 and 2 here is going to see a very strong move to the upside. There'll also be a 1 and 2 in here as well. So we're either going to see a strong bearish move or a strong bullish move. On the tick side, so I've got a couple of counts here, but we can have it as wave 2 up there, or wave 1 here, wave 2 here, wave 1 here, an A and a B and a C for wave 2, and then 5 waves up here. But all of that, it's all good. What I'm sort of interested in here is this little space here. So this being the A wave here, the B wave here. I suppose we could look at that as 1, 2, 3, 4, 5, maybe. The A, the B, and the C. Is that done and dusted there? Look, that also looks corrective there as well. Look, it could go up to to the 50, to supply levels here. So just be a little bit careful about that. Obviously, if that top gets out, we want to be long at that point. But what I was sort of thinking is going long above wave B here. Let's just like to wait on. It looks like it wants to pop. So let's just say that wave B comes up to this point here, and then what we'd be looking for here would be 5 waves down at that point. Okay. So that means that if that comes in, that would be there. If that's wave B and this just drops down here, which is viable as well, then we want to be long above this one. But you won't know that until you're over here. Do you know what I mean? So yeah. So don't go long just taking that out, because you'll just be trapped, obviously. And then wave C of 2 coming down to the 42,000 at the 61.8%. So if you can count your waves and you can count 5 waves down here, and then the market, well, yeah, it's just probably better. If this came down through here, then there's going to be a bounce in 3 waves, probably coming back up 50% of that last leg, or 40% or something, and then moving down. So it'll be pretty obvious, you know what I mean? So wait for that reference point low, because you could get trapped, because this move here might be wave 3 coming down to here, wave 4, wave 5, and then moving back up from that point. So if you take that breakout here, you can get trapped. So don't do that. Breakout's important, and most trading systems get you to take it, but I think it's half the time it's a bit of a trap. So that's it, in a way. So we're getting to the point where we're going to know if we're going to be in a big bullish move like humongous, or we're going to be in a bearish scenario. It's that simple, really, which is pretty exciting, I think, either way. I've got myself I bought some more on the Sunday here, so I got some on Saturday somewhere in amongst here, I think, and some, I think it was pretty much low over here, maybe, can't remember. The time the currency goes through and gets filled and all that sort of stuff, I have to check. But anyway, so I picked up just $10,000 worth there anyway. Yeah, so I'm just looking to hodl back in. I mean, if the market does crash, well then I won't be hodling in. I'll just be saving and buying at lower prices. But I'm taking a 10-year view, so it's not here nor there really. But obviously, one does their best to do what they need to do. So yeah, that's the story with everything. And Ethereum is the same as well. So if I just bring Ethereum across here, Ethereum's quite good really because we've got the 3,000 to work off here. So we've got wave 2 here with wave 1, ABC for wave 2, then up for 1. 1 could also go on this high here as well. Wave 2 here and then wave 1, and then we're looking here for an ABC, so it's the same sort of thing here. First of all, we can go long above there. Secondly, we want that wave B to come into play. I don't know if that's in or not yet. So don't go long just there if it goes up there, because it may not have finished just yet. Do you know what I mean? But if the 5 waves down here has started, because that will be the ABC pattern that we'll be looking for at that point, being on the bullish side, of course. But it may not be the case. It could be down for wave 1 and wave 2 and all of that. Like, I don't know if that B wave is finished, okay? So don't go long there straight. That going long needs to be over here, so I'll put it over here out of the way. And wave C down here for wave 2. So in this case, just from the outset, you can be bearish or get out of long positions at that point on that low. Yeah, I mean, there's a good case for the bearish side, don't get me wrong. There's a reasonable case for the bullish side as well. But we're just getting to the point now where we're going to know one way or the other. So that's going to be handy. Let's see. So, gee, we could know by the end of the day, really. By the end of the session. Or the end of Monday session in the US or something or other. So that's pretty exciting. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.